$45.12 million. Right now, that's how much leveraged Bitcoin long positions are sitting in the direct line of fire at immediate risk of getting wiped out.
So what are we looking at here? This is a heat map, and it shows us exactly where billions of dollars in leveraged bets are placed. Every single one of those bright yellow spots, that's a massive pool of money just waiting. The market, right now, is a total powder keg, just primed for a huge volatility move designed to liquidate every single one of these positions.
But here's the thing that should make you pause, the part that most people are completely missing. The price is grinding higher, right? But the biggest, most concentrated pools of money, the real prize, are actually sitting below us. On the surface, it looks bullish, but this could be a giant trapdoor about to swing open.
Hey, if you're finding this valuable already, do me a quick favor and drop a like. It really helps get this analysis out there.
All right, so how do we even get here? First, let's break down this upward squeeze. This is the story of how anyone betting against the market got trapped and liquidated over the last 12 hours.
Okay, so this slide tells the whole story. On the left, you see that thick, bright wall of liquidity building up. Those are all short positions, traders betting the price is going to fall. Now look to the right. Just a few hours later, poof, it's gone. The price didn't just drift up there by accident. It made a surgical strike to that exact level to liquidate them. And this just perfectly illustrates a fundamental truth about these markets. Price is a magnet for liquidity. It doesn't move randomly. It moves with purpose. It goes where it can take the most money from people who are over-leveraged.
You know, we put out these deep dive explainers all the time. If you want to stay ahead of the curve, you should probably be subscribed to the channel.
Now, this is where it all ties back to that contradiction I mentioned at the start, the hidden downside risk. Because while everyone was distracted watching the shorts get burned, the real target was quietly forming right underneath us.
So it begs the question, right? If the trend feels so strong, if we're pushing higher, where could the real risk possibly be hiding? Here it is. This is the chart that matters more than anything else right now. While the price was busy squeezing out shorts, this massive, glowing yellow blob of liquidity has been building up below us, specifically between 86,000 and 88,500. Those are all the long positions.
And that's the key takeaway. This is the big unaddressed vulnerability in the market right now. Even though the price action looks strong, this giant pool of trapped longs is literally the fuel for a potential and probably very sharp cascade to the downside.
Look, this situation is changing by the hour. For the absolute latest, real-time updates as this whole thing unfolds, you've got to be following us on Twitter.
Okay, so let's stop talking in concepts and start talking numbers. Let's actually quantify the magnetic pull of the upside versus the downside and see where the real incentive lies. And boom, here it is, laid out plain as day. A push up to around 92.5? Yeah, that would take out a decent chunk of change, maybe $30 million in shorts. But a move down to 86,000, that's the real prize. That targets the massive pool we just saw, worth over $45 million.
So, when you just look at the raw data, the conclusion is, well, it's pretty obvious. Market makers are financially driven to move the price where the most money can be taken. And right now, that path of maximum financial gain is pointing decisively down.
If this is helping you see the market in a new light, we'd really appreciate you hitting that like button. So let's put all the pieces together. Let's create a clear forecast for what's coming next. We call this the path of most pain because it's the scenario designed to hurt the maximum number of traders possible.
Here's how it's most likely going to play out. First, you get the Judas swing, a final deceptive push higher to take out those last shorts above 92,000. Second, as soon as that liquidity is grabbed, you see a sharp, violent reversal. And third, the main event, a rapid cascade straight down, targeting those huge pulls of money we've been watching at 88.5 and 86K.
You are not going to want to miss watching this unfold, so make sure you're subscribed.
So, I'll leave you with this final question to think about. In a market that is literally built on traps, are you positioned for the most likely path based on the data, or are you positioned for the most obvious one? If you want to stay ahead of these moves, make sure you're subscribed with notifications on. We'll see you in the next one.